Thank you so much for joining me on the show today. Mustapha, before we get into the earnings, I would like to get your thoughts on how you see the market has performed so far.
All right. Thank you very much, Kenneth. I think that the strong performance that we've seen since last week and perhaps at the start of this week is more or less an evidence or a testament to the fact that that risk that has permeated the Nigerian equities market has largely been priced in. The sort of sell-off that we saw in March, we think that it is largely overdone, and Nigerian equities market is more or less in a better position compared to where we were coming from at the start of this COVID-19 induced, sell-off. Yes, there have been some sort of positive development that we've seen in the market thus far. For one, we've seen that the IMF has approved the $3.4 billion RFI loan request by the Nigerian government. And obviously, if you compare this 3.4 billion versus our estimate of, balance of payment imbalance of close to $20 billion, what you see is that this 3.4 billion is more or less a drop in an ocean. But in a year where Nigerian government need to spend a lot in a bid to limit the impact of this COVID-19 induced slowdown on economic growth, we think that this 3.4 billion will come really very useful as far as budget support is concerned. Outside of that, we've also seen that corporate earnings so far has been largely quietly a bit strong. If you start from bank, for instance, we've seen, most of the banks that have reported so far releasing, cumulative earnings growth of about 8%. Asset quality wise, core earnings has been fairly strong. I mean, when you compare it to the kind of environment that they are operating in, it has been really strong. For MB, we've seen MB in the consumer goods segment, reporting a revenue that is more or less in line with what they reported in Q1 2019. But we know that EPS was down for MB because of the fact that the company is still struggling to limit OPEX pressure on earnings growth. And finally, we've also seen that companies in the telecommunication sector has reported solid numbers. MTN revenue was quite strong, and it was largely supported by data, digital, and also fintech revenue. So overall, the positive news from the macro landscape and also resilient earnings releases thus far is more or less one of the key reasons why we've seen investors, giving that's more or less what believe gave investors some respite in the market.
All right, but looking at the list here on some of the top gainers for today, you see the market is up 3.12%. We see Nestle gaining 54 naira, then Dangote Cement 13 naira, MTN Nigeria up 4 naira, Zenith Bank up 50 kobo, and WAPCO 50 kobo. Looking at this mix of stocks here that are coming out tops here today, what do you make of them?
I think that the market has largely been oversold. I mean, like I said earlier, that sort of sell-off that we saw in March was really overdone. We think that the prices are down to the point that investors had no choice but to reposition in this sort of quality name with significantly low entry price. So I suspect that that's why we're seeing some sort of renewed interest in the market. I mean, long-term investors this is actually the time for them to reposition in the risk assets space in Nigeria.
All right, now let's get into the earnings now. We're looking at USCN here, Q1 up, PAT down, Q1 PAT down 41%. Revenue is also down 2.9%. What are you looking at for USCN?
So for USCN, revenue is down 2.9%, like you said correctly. However, we think that 2.9% decline is more or less basically supported by the reclassification of MDS Logistics. If you strip out that MDS Logistics from the earnings, you will see that revenue has grown by about 4.9%, and it was largely supported by the food segment of the business, which more or less is not really surprising considering the fact that most Nigerians basically front loaded their demand at the start of this COVID-19 induced pandemic, right? But we also note that USN also reported PAT of over 87% year-on-year growth, and that's basically supported by gains from discontinued operation. You remember that last year USN decided to let go of their investment property business, so the impact of that was basically supported earnings growth for the company. I mean, core operation wise, the company is still looking very strong. it's just that reclassification of MDS logistics, that's what basically clouds the positive numbers from top line as far as we are concerned.
All right, now let's go into PZ now. Looking at PZ, revenues are down 0.6%. We're seeing gross profit also dropped about 30%. What's playing out there for PZ Cousins?
So really for PZ, we understand that PZ is more or less basically caught in that wrong fundamental shift in Nigeria consumer pattern, our consumption pattern in Nigeria. So that's the problem for the company. I mean, revenue was down by about 0.6% over 9 months 2020, and it was basically against the fact that the company is still continuing to face that sort of cross product competition in the space, and most of the companies price at an elevated point compared to its competitor. But beyond that, we also saw that because of the fact that consumer consumption pattern in Nigeria is more or less shifting to value products. I mean, for instance, I take for instance Imperial Leather, which is one of the flagship product of PZ. I mean, we've seen that that sort of products continue to perform decent in Europe and also in Asia, but in Africa it has continued to underperform. That's because most Nigeria are now shifting to cheaper alternatives. So that's the problem with PZ right now. But going forward, I mean, if you check the revenue on a standalone basis in Q3, what you see is that revenue actually grew by about 3%, and that's because the company is now more or less shifting towards product optimization and also repacking its value products, so that I mean it's continuing to leverage on retail segment of the business. So I think going forward that should continue to play out positively for the company.
All right, but looking at how the consumer goods space has played out today, so yet today we're seeing it's down 37%, but it's not masking the story for what played out in the month of April. Looking at the team, we're seeing that it was up about 14% in April, clawing back some of the losses. I would like you to speak on, what you see for this space.
For consumer goods, I think that 2020 is going to be more or less a pressured year for the sector in Nigeria. I mean, obviously because of the fact that we expect the currency to depreciate further, and most of the companies operating in this segment more or less still rely heavily on importation of their raw materials. So we expect that to put a lot of pressure on margins for most of the players in this segment. And beyond that, on revenue basis, I mean, Nigeria is in a period where consumers are now are focusing more on redirecting their consumption pattern towards food expenditure. So most of the companies who are in home and personal care space are more or less going to be reporting significant pressured revenue numbers, given the fact that consumer wallet right now is tight. A lot of people are focusing on purchasing basic necessities such as food, and forgoing anything that's outside of that space. So we think that the combination of COGS pressure and also a decline in volume for most of these players would put a lot of pressure on earnings growth for the company over 2020. But beyond 2020, we think that the fully recovered economic activity in Nigeria would more or less play out positively for them. I mean, by 2021, we think that most of them are going to be facing a high base as far as cost is concerned. So the impact of that will basically support margin growth for the operators in that segment. But for 2020 overall, it's more or less going to be a really tough year for most players in this space.